Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Auskerson, one of your hosts for today, and you can see I'm in the New York office with Barry Melanson. Barry, it's great to be with you.
Always great to be with you, Eric, and our 10,000 or so participants. Always great to share some things, and a lot going on in the world, in case you didn't notice.
We've got a lot going on, and we hope you're all having a good summer. This is gonna be a full hour. So we're going to kick things off, Barry, with a discussion with Wes Bricker, who leads the global assurance at PwC. And it's going to be, I think, a very important discussion for the town hall audience, talking about the capital markets, audit quality, a lot of topics that we'll be covering with him.
Right. You know, the audience of people who participate in this town hall obviously skew to smaller firms, smaller entrepreneurial businesses. Obviously, we have people in all different size spectrums here, but as far as the volume, you know, we're all part of the capital market system, and our profession is a really, really, really important part of the capital market system. And it obviously affects the economy throughout major companies. And so, you know, in our constant effort to bring a variety of topics, we thought Wes would be a great discussion to really talk about some of the focal points, and just I think it's important for everybody in the profession to have a frame of reference of what's really going on in that space.
So after we do that opening discussion, then you and I will provide a DC update. A lot going on with the presidential election, you know, implications for legislation. We're going to look ahead a little bit, talk about, you know, what would happen in a Democratic administration versus a Republican administration. And then we're going to talk about, you know, some important Supreme Court cases, cover, you know, the implications of the Chevron decision. Melanie Lauritsen, who leads VP of Tax and Policy at the AICPA, is going to join us for that discussion. And we're also going to give the town hall audience an update on BOI. And then we'll close out with the technical update section. Lisa Simpson's not with us. She's on vacation this week, and Melanie will be providing that update. So let's bring Wes into the discussion. Here's a little bit about Wes's role. He leads 137,000 partners and staff across the PwC global network. Thinks a lot about innovation, quality, delivering assurance to clients globally. He's also a former SEC chief accountant. He currently chairs XBRL International, and he's also an AICPA board member. It's fantastic to have you here with us today.
Well, it truly is a privilege, Eric, to be here with you and Barry to be together and in a discussion with the profession. I love the opening point that we all have some role to play, and whether it's big or small, we're all in this together.
That's right. Everything is in some form or fashion connected. And we learned a lot about that in COVID, about how supply chains connect the economy even a lot more than people thought.
That's exactly right.
Well, Wes, you've been pretty active in communicating with articles on LinkedIn. You also have Wes with Business podcast series that you put out. What we've done for the town hall audience is we've got two of your more recent articles as resources, and we're gonna kick the discussion off talking a little bit about your career journey. I mean, this article came out at the start of July, and you had just some really profound points about, you know, what the profession means to you, and you started off talking about how your view on how accountants underpin business.
That's right. Well, it's interesting, Eric. I grew up in a small business family, Chambersburg, Pennsylvania. My father and his brother had taken over the family business, was in sawmilling. And I grew up with a CPA as our sole tax provider. She was a sole proprietor. I grew up understanding cash flows, relationship, and taxes in a local community, and that really shaped my thinking that the work that we do as accountants, one, is a privilege because again, whether we're a sole proprietor or a larger firm or an organization, accounting and the work that we do is critical to making business decisions to making government decisions. I've had the privilege of working in both the public and private sector. And so as I put pen to paper in that piece, what I'm really focused on, and I know collectively we all build toward this, is the role of accounting in society. I focused on business in this case because accounting makes business better. It enables people to allocate capital, to make decisions so that businesses can operate, grow, and compete. And that's true all around the world. It's especially true in the US.
I was just going to say, and I think, what you described with your father and I guess uncle in that business environment, that's the sort of the epitome of 40,000 plus CPA firms and the people that work with them in that trusted advisor role. You've heard me talk about that all the time. And of course, when we get into the audits in public, company environments, the independence notion, we have to think about that slightly different because of that really third-party reliance in the capital market system. But the value add and the sort of the veracity of what we impact on society, I think you articulated right on.
Yeah, the role of an auditor, and Barry, to your point, which I fully agree with, if the value is an objective perspective, we show up with integrity and perspective. We bring that. Right. If instead the job is to work with management to solve an important problem for business, well, we can show up in that way too. It's a different service. And so that's the flexibility that accountants all around the world, and especially in the US, and especially credentialed accountants as CPAs, can really bring to society to build trust and to build into ultimately better decisions for the businesses that give people jobs and that operate and grow and then ultimately compete.
And make economies thrive.
That's right.
Well, I mean, let's just step out a little bit for the audience here and talk about the global markets. And you, in the month of June, you connected with auditors, regulators, and standard setters and investors in Singapore, Madrid, Dublin, and London.
That's right.
So, I mean, that perspective is very unique. I mean, earlier in my career, you're talking about early in your career, early in my career, I was in the United States Peace Corps in Africa. And I can tell you one thing, just the importance of accounting and the language of business and in healthy functioning markets is just so important in development. And I mean, your perspective as you go around the world and work with your offices.
Yeah, it's a privilege to ultimately spend that amount of time on planes, but the real privilege is to be with people. In Singapore, for example, we met with clients, members of the government, we met with members of the profession to really understand business from a regional Asia perspective. In Europe, as you mentioned, I was in Europe twice in June. I met with the chairs of local regulators and Barry and Eric, a number of folks that we know in common. What's been so interesting about those discussions, this is true in London as well, is that the profession is on the move. Right. It's relevant in those societies because increasingly policymakers through practitioners understand the importance of bringing expertise and a sharp perspective about where to go next. So it's relevant. Number two, the pace of change, both in labor forces as well as technology, is common across markets. The labor markets in Europe or the labor markets in Asia all require a set of skill sets and expertise. And I know as a profession, we've doubled down on the relevance of skills and reskilling people. And then technology. Technology is changing the way work is done. It's raising productivity levels, but it's also enabling us to be better versions of ourselves.
That last point is right on. And people talk about AI, and I readily admit, technology, and the most common one we're talking about is generative AI today. But, to say it's not going to affect jobs of people, I think people go out of their way to try to say that, but that's not really true. Right. But I think what is true is that it frees us up, exactly like you said, Wes, to really do the things that are important to others, and we bring our skill sets to it. But what you laid out creates also this dichotomy in our profession, though, because a lot of our members of our profession like specific answers, and we're going to talk about later in this town hall, where like the Chevron Supreme Court decision is going to probably make more of a gray area type of environment. But we like, somewhat of a concrete answer because we feel better about the quality of our answer. But the opposite of that is we're actually more valuable when we can sort through those things, even where there's some uncertainty for our clients or investors or entrepreneurial businesses, because they don't have the same frame of reference we do to sort through those things.
That's right. The accountant brings so much context.
That's right.
Right. Context for society, and then translating it into the expert domain, whether it's a tax return or an audit or a piece of business advice. Adding that context is incredibly valuable.
It is.
Well, let's bring it back to the U.S. a little bit. So how do you look at the U.S. capital markets compared to the world capital markets? And I remember a discussion Barry and I had with you and Chairman Clayton just about the U.S. capital markets when you were the SEC chief accountant. So how are we doing today?
Yeah. Well, look, the capital markets are never static. That's one thing that's true. And the market capitalization, meaning price of a security times the volume of securities, that continues to rise. And so when you look at it at the highest level, you would say our capital markets are vibrant, and they need to be in order to continue to fund the U.S. economy. So that's the importance is clearly evident. But equally, I think it's important to look the next layer down and really ask the question, like, what is the foundation of those markets? What's the quality of information that's really the bedrock of decision making within them? And we do see some changes. We see, for example, traditional financial disclosures. Of course, that's relevant, but also an expansion of the kinds of information that the market is consuming in order to allocate capital. Sustainability information. Barry, you talked a lot about AI, and the number of mentions in earnings call scripts, in disclosures about AI is really a leading indicator about innovation within companies that are raising or operating with the benefit of capital. So that's an important disclosure. The role of the auditor in bringing assurance and trust to that system is critical. And that's why, Eric, I know you mentioned one of the pieces that I wrote was really on this idea of how strong is the system? And what I've focused on is very much, we all need to be on the same side. The profession, policymakers, regulators, we're all on the same side in reinforcing the quality of that system, because we depend on the efficacy, Barry, I'm going to borrow one of your terms, the efficacy of that system to operate. Now, that's not to the exclusion of a healthy private capital market. We need both. We need healthy public and private capital.
Yeah, and from the profession standpoint, Wes, and I know you and I have talked about this as well, and you alluded to it just now, the profession's growth and evolution in a world of crazy speed and uncertainty is really about not thinking about ourselves in the financial numbers only, but the broader information set that is driving a whole lot of activity in the world today. The world has shifted, and if people have heard me over the years to speak about that, I talk about that all the time. This broader footprint is critical to our profession. And if we think of ourselves in that just whether it's a entrepreneurial business or if it's a capital market focused business, that we're going to miss that shift, because that shift is clearly occurring around the world, not just in the U.S. markets. And frankly, a piece of that is we have to make sure when we think about the investment that this country needs to make and the deficits that we run and things of that nature is how you say it wonderfully. How do we have the capital to do all of these things, right? The change that is inevitable for society as a whole, capital markets have to help to provide that. And if we have too much regulation that is maybe risk averse, let's call it, that's over, it's a more significant burden, we're actually going to hurt ourselves from a big, giant macro perspective of where we sit in the world.
It's so well said. Innovation involves risk. If you take out risk, you don't get innovation. And the balance in the U.S. system is that it brings enough information about material risks so that companies can get the capital they need in order to innovate and to grow and to compete, give people jobs, and the like. And that's one of the areas where the profession, in leaning into the system of policies, whether it's capital markets or private markets, whether it's tax returns or audits, everyone in the profession has a role. And I know that the AICPA collectively has really leaned into that in a very positive way.
Yeah. And you used the word efficacy. I think I'll just put the dot on the I on that.
Mm-hmm.
I've always been a big believer, and I said it to you when you were in the SEC role that you're in, is that if we think about, instead of protecting a piece, the investor, which is the primary focus of where the SEC has been for decades, it's very important. We all understand how important that is. But if we think about it in the context of the efficacy of the capital market system, we get different rules, different approaches, different answers.
That's right.
And if you think again about the health of our country, the people and the standard of living and all the things that come with that, it's really about the efficacy of the whole system, not just protecting one piece of the system.
It's really well said. The U.S. system, whether it's the accountancy system, the capital market system, it's truly the envy of the world.
It is.
Right.
It is.
As I travel around, other countries would love to have what we have. And that's our role in building it, advancing it, shoring it up, not just for our generation, but for the next.
But regulation plays a big part of that. That's where you're going to go, right?
I think that was just a great segment. I mean, and you've got a wide lens here, and we should be really proud. We should be really proud that our capital markets is the envy of the world, and it is a huge role firms of all sizes play. So we're going to get into a couple more topics, but I do want to ask you a question. I mean, you're in a large firm.
Sure.
The role of the small and medium-sized firms in building this incredible capital market here in economy in the United States.
We need everybody.
Right.
We need everybody. The profession is at its strongest whenever we have a large number of firms, from the very smallest to the very largest. And that's true certainly in this time when there is a mass market need for trust, when there is a pace of innovation that's coming into the profession, new forms of capital, new forms of entrance coming in. This is the time when the profession has the opportunity to sit around the table, large firms and small, to innovate and to build our system for the next generation. And that's why I'm so excited about not only where we are, but where we're going. Even though I'm part of a big firm, there's plenty of space for everybody, and we need everybody.
And Wes, I see that all the time, and I'm working with a lot of startups, and the startups are working at the very early stages with some very small firms. So they're out there working with a small firm. There's a lot of actually outsourcing, this whole movement of client accounting services, which allows a small entrepreneurial business to get going faster. They outsource it to a firm, and that's fantastic. And it's a great partnership that, Barry, you know the role of the trusted advisors, and that's a huge engine of growth. And then over time, a lot of those companies, some of those companies go public, and then they have greater needs
or get purchased by a public company or whatever the case may be. The regulation issue, though, does disproportionately affect smaller firms in this space, and just maybe a comment on that, because I think there are a lot of firms that are below the big four or the big eight or the big 10 or whatever you want to call it, that is that they're seriously saying, why do we want to do public company audits? Because the amount of angst associated with that is at probably record highs. Let's just be honest with that. And I always answer that question by saying, it's not the largest firms that want that to happen, because they have the same angst in these particular areas. It may be easier for a smaller firm to choose not to do that type of work, but it's really an unfortunate outcome of the environment that we're in, right?
Yeah, I really do think regulation has phased and graduated so that firms of all size have a place in the public markets as well as other aspects of the markets. A system is not healthy if it's just a large firm system. And as I look at proposals, whether it's coming out of the regulatory space or elsewhere, the more we can do as a profession to reinforce the need for phased and graduated approaches, the need for roundtables and discussion to share best practices, the need for an open and transparent approach that builds capacity, especially in this period, I think is really where time needs to be focused.
Well, we're going to go into a little bit of a lightning round with you. And one thing that's going to help with all that you just discussed is technology.
Sure.
I mean, to understand all that's going on with the tax code, to follow the auditing standards correctly, and having the best methodology, a dynamic methodology. These firms are putting in state-of-the-art technology platforms. And one big technology that we're all talking about, I know you're thinking about it, is the Gen AI.
That's right.
And what's going on there. And I know you even have a partnership with OpenAI.
That's right.
So what's going on with the state of AI as you see it?
Sure. It is a game changer in many respects. But importantly, It doesn't replace the profession.
Right.
It just makes it better. So the work that we've done as a firm with OpenAI, with Microsoft, and some of our other technology partners has really been focused on taking the core attributes of being a professional and then looking for ways that technology can come in to support that. So generative technology, for example, helps with deeper retrieval of information, helps us to make connections and to make matches differently. It helps us to write code much more rapidly and at a tailored level so that we can meet a client and its data systems where they are. We can meet them where they want to be met. So those are the capabilities that change the experience of being an auditor for the better. It can take out some of the really sort of minute areas, freeing up someone to really understand the business model, to make broader risk connections. That's where I think large language models and OpenAI is a really key member of that ecosystem, has something for all of us as accountants. That's something, Barry, I know you've talked about at every big inflection point in technology, it's expanded the profession.
That's right.
And that's what we see as well, because it's of course changing the experience. It's also creating new opportunity for assurance providers, new opportunity for tax providers, et cetera.
And in a period of tight human capital, what you're describing actually helps tell a better story to young people and to change the image of auditing, whether you're auditing the corner store or you're auditing a listed company. It changes the notion of auditing from the standpoint of attractiveness to young people.
That's right. It creates that mobility of a professional that enabled with technology, that professional can travel into a number of different sectors, business types, and the like.
Well, I think this is a perfect conclusion for today with you, Wes. I do look forward to having you back another time. We can talk about things like XBRL International and many of the other activities that you have underway. But just a great discussion. And I'll make one comment just on the technology. I say it all the time. It's the great equalizer. It's a great equalizer because firms of all sizes can be leveraging generative AI, large language model. They'll be doing that through solution providers. And actually what we're seeing is it's going to accelerate the role of the trusted advisor. Well, thank you, Wes.
Yeah. Wes, you're a great leader. Thank you for the work that you do for the profession and obviously for your firm, but good to be with you.
Thank you so much, Barry.
Thanks.
Eric, thank you.
Thank you. Okay, Barry, we're going to go right into a DC update here. There's a presidential election underway, Barry.
Really? I did not know that.
So what's, everybody's reading about this in the 24-hour news cycle. But what we're going to talk a little bit about is, what is this meaning to legislative activities?
Well, the first thing I would say is, we have elections, major elections in this country every 2 years. And when you're in the election cycle, it always takes the steam out of the legislative process. I think that the word today would be taking the oxygen out of the legislative process. It really, stuff is grinding to a different place than normal. And that's because of the controversies associated with this election. We have the whole age debate for both candidates.
Right.
We have certainly the fallout and the pressures on the president as it related to the performance in the debate. We obviously had very significant news with an assassination attempt. These things, and then now continued calls for, even the president to continue to think about whether he is a candidate or not. That's not going away. But I think as it relates to the issues of our profession and those things in the front, it's really important to just understand, the sort of the sand in the gears is extreme right now. So what we're talking about today more is some activity from the courts and some activity as it relates to where it might likely go.
Well, the first thing we're going to do, though, and this is, we could probably spend 10 hours on this. I was going to say 10 minutes. We're going to spend just a minute. But this is the type of tracking that the AICPA advocacy team is doing. And this is just looking at the Democratic president versus Republican president. And then you see here, is it a Dem House and Senate on the left-hand side here, or a GOP Republican-controlled House and Senate, and then a split House and Senate in the middle.
Right. These are the possible scenarios, and this is just a tax picture.
Right.
We have replicated pictures of this on all of the major issues important to our profession, and we look at them in a very strategic way as to what is likely to happen, and then we make plans as a result of how elections actually come about. And obviously, what happens in the White House is the major, either or type example, but how the Congress looks could be very different as well. So if you just look at this, for instance, if you look at SALT reform, the possibility is actually there for every outcome, but how big of a reform would be in the SALT area is much larger if it's a Democratic president, Democratic House, Democratic Senate, and even though it's possible with a clean sweep on the Republican side, it would likely be very small and incremental as to what would happen in that process. If you look at the year-end tax bill, the Wyden-Smith bill that has actually already passed the House, and if you think about it in the line above that, the sort of the major aspects of 2025, those types of things really change based on how the outcomes are. And so, I'm not going to go into each one of these, but I think it's important that, obviously 2025, we've been saying this, is going to be a major tax bill. You can see, it being major is very likely if it's Republican House and Senate. It's also very likely if it's Democratic House and Senate with a Democratic president. However, what's in it is going to be different. And so that is the major aspects of what happens. In the middle columns, obviously, a little bit more of a forced compromise with some of these things.
Well, let's, one thing that is, there will be a tax bill in some shape or form, most likely in 2025. Let's now bring Melanie up to join us. Melanie, great to see you. You're in our DC office today, and you're gonna kick us off and give the town hall audience a little background on what happened here with the Chevron case.
Yeah, so we have a couple of cases that have some serious implications. So with the Chevron case, so actually back in 1984, the Supreme Court issued a decision in Chevron versus the Natural Resource Defense Council, which involved a challenge with the regulations of the Environmental Protection Agency, the EPA. Now, what that decision said, it gave the notion of Chevron deference, which essentially means that the courts can give deference to the expertise of the government agencies in interpreting legislative statutes. So fast forward to the Lober-Bright case, where a fisherman disputed the EPA's requirement to pay observers on their boats to ensure compliance with the regulations, and they disputed that. Now, the case really wasn't about the fishermen. It really was about disputing the Chevron deference doctrine. Now, the courts overturned it, and they determined that judges can no longer depend or defer to an agency for interpretation of the law where the law is ambiguous. Now, this was not a surprise. This ruling was not a surprise. The courts actually haven't been relying on Chevron deference for some years now. And the courts also made the decision to not reopen a certain amount, roughly about 18,000 court cases that had relied on the Chevron deference. So if we go to the next slide, here we have another case that also has huge implications, and they kind of tie in together. So the Corner Post case is a case against the Federal Reserve regarding capping interchange fees for a regulation that was issued in 2011. Now, the business was incorporated in 2017, and the business came into being and open for business in 2018. Now, previously, the courts had held that the agency had a 6-year statute of limitation in which the agencies could be challenged. So in the Corner Post case, when they were suffering damages, they were after that statute of limitations, and Corner Post decided to sue and appeal the case. And the judges actually ruled that the 6-year statute of limitations, it wouldn't start when a regulation came into effect or was enforced, but actually it would start when a plaintiff was injured. So this is a really big deal for regulations because it really does open up old cases. And we do know that Treasury has had old regulations which they weren't procedurally compliant. So again, older cases can be brought forward. So collectively, Luper Bright cases will most likely affect the future rulemaking within the IRS, while Corner Post will affect the existing retroactive. And that can go back many, many decades. So collectively, what does it mean for the IRS? Well, regulations, which we'll touch on some of the regulations like the partnership basis shifting or the 60/45 broker regulations, they now have become vulnerable because there's aspects that are legislative and some that are regulatory and pieces that can be void and others that are legitimate to move forward with. Now, the federal judges, they can actually rely and determine and put weight on, say, the IRS's expertise and experience, but they don't have to accept it. And now the IRS will have to stay within the bounds of the laws because they could be challenged at any point moving forward. And of course, with the Corner Post case, it could be decades. You could have a regulation that's over 20 years old, but you're injured now and it could be brought forward again. So lots of exposure for the IRS. Barry, any suggestions, inputs, thoughts?
Well, this is a big deal, and it's a big deal for the profession because it's not just IRS related. It's a whole host of other, the so-called 3-letter agencies of throughout the government. And so if you just take a step back, if you're a person who believes that, the power of the federal government should be somewhat limited, the power of the government, staffs, if you will, they shouldn't be making law. That's the legislature, that's the Congress's responsibility. Then you probably like this. But the reality is that when you start to bring it home into some of the things that the profession does, and I think Melanie laid a couple of examples out really well. The reality is that in the case, particularly of tax law, the uncertainty, we like certainty. We like to be able to advise clients. We'd like to be able to get to a conclusion. We like to know that something can be done and there's precedent and there's interpretation that supports a tax strategy, let's just call it. There's going to be a significant amount of uncertainty in these things going forward, absent some new different, court decisions. And so I think we're going to be dealing in the tax area, particularly as Melanie is talking about, with a much greater degree of uncertainty because we do know that tax laws, and we just talked about we're going to probably have a massive tax law in 2025. We know that tax laws aren't written with the precision of true administrability. We fight those things all the time. And so I think it's going to cause a lot more gray area. Now, the reality is that Congress is going to be very active in this way. And you see a letter here from Steve Scalise, who's part of the Republican leadership in the House of Representatives. And basically what all of the committee chairs in the House of Representatives done in a coordinated fashion is that they've sent letters to the agencies of their jurisdiction. And they've asked basically for what rulemaking is underway, what rulemaking has just occurred in the last so many years, what rulemaking that you have is under some type of legal challenge in some form or fashion, and about 5 or 6 different questions that they ask. And you can, and basically the premise, Scalise is part of the Republican leadership of the House, so this is a challenge to what the House leadership believes is an overstepping of authority of the White House, not necessarily in areas that we all would be touching, but in the general notion of rules and regulations in the federal government, the interpretive power, the expressing of this is the answer we're going to give, and we're going to do it on the basis of just interpreting something. So Congress is going to be very active on this. And of course, going back to the chart we just had up, who's in control of the House and the Senate, and the oversight that goes to these various agencies is going to have a very significant element of how rulemaking and how business answers really come about in a whole host of different areas. And as I said, you can make a case that that's a good thing. Legislators ought to legislate and not rely, on as much interpretation that exists. But we also will hear noise in our own environment of we need some answers. And we know we get frustrated when we don't get answers in a timely fashion, and filing dates and all of these other things are necessary to give good advice to clients.
And sometimes, Barry, these bills are put together in like 48 hours, like the CARES Act, or not 48 hours, but in a couple of weeks, and there needs to be work post-writing of the law.
Yeah, or they're so voluminous that there's conflict and everything else in these laws. Dodd-Frank is the largest piece of legislation, I think, passed in any legislative body in the world. If you printed it out, it's two-sided. It extends past the 6'5" person. So it's when you just think about the volume of that, there's immense amounts of interpretation that goes about, that we rely on agencies. And now almost any plaintiff, anybody injured, as Melanie said, or believed to be injured, can bring cases on these things and will probably win.
Will be Looper, Bright, and Corner Post, two names that will probably be.
And we'll throw Chevron in there because of the historic.
You got to throw Chevron in there as well. So, okay, let's continue on. And this is something that has an effective date of right after Labor Day, September 4th, but also some implications due to the Chevron.
Yeah, this is one of those areas that probably front and center on the Chevron, the reversal of the Chevron doctrine. There's a lot of people who are saying that this prohibition on non-competes that came about through an extension of interpretive language, if you will, by the FTC, is very likely, to be challenged, and frankly, successfully challenged. I will say, though, on this point, because we've talked about it before, the non-competes and the impact on the CPA profession, and people have heard me say this, I think the vast majority of firms have moved to what is generally called client buy-sell arrangements, et cetera, as opposed to non-competes in their arrangements. Arrangements not prohibiting competition, but you basically pay for the taking of a client. That's really the most common outcome. I admit not every firm has done that, but more and more firms to that particular direction. And generally speaking, I think the interpretation of what is out there, even if it were to survive, is that those buy-sells don't get eliminated under this FTC ruling on non-compete. So it's probably got 2 bites at this apple, both the Chevron doctrine reversal and the fact that if it's a buy-sell, you probably have a bit of a different direction you can go.
Here's a question. So you've got the overturn of the Chevron doctrine, which is related to agencies' interpretation of law. Anything related to this? Any impact to the professional standards? I mean, that's.
No, professional standards are set through independent standard setting processes. So in the case of public company auditing, the PCAOB as it relates to audit, as it relates to accounting standards, an independent agency, FASB, GASB, setting standards for accounting for enterprise businesses and governmental agencies. Obviously, we set standards for auditing standards for private companies. So this would not be that type of environment, because those are done through due process, not necessarily interpretive language. There could be some things in the SEC's interpretive area of where they take a standard and they interpret it on an enforcement matter, et cetera, that could be brought into that debate, but not the standards themselves. Highly unlikely that extended to that.
Okay.
Great question.
Good question. There's lots of clarification that will continue to come out. So let's move now to another topic that we've been covering since the start of the year. Melanie, beneficial owner information. And there was some testimony by Secretary Yellen this week.
Yes, there was on July 9th. So let me be very clear that the BOI reporting is still moving forward as planned. So as you mentioned, Secretary Yellen did come forward and she said that she didn't believe it was necessary to extend the filing requirements. Now, a lot of committee members actually pushed back on her, saying that it was a real concern that small businesses were really truly lacking awareness, and they weren't, there are penalties associated with this, and they weren't filing. And Secretary Yellen came back and she said she just wasn't concerned with this because penalties were applicable if someone willfully didn't file. Now, when she was pressed on the definition of willful, she didn't provide a clear definition of what a willful violation would be. So that's a little bit concerning, but regardless, the point is, for our purposes, I do want to echo that the BOI reporting is still moving forward, and it is still a requirement for many, particularly the small businesses. So we recently
Let me just insert one point on that, Melanie, though, but we do have legislation, and we'll talk about that.
Yes.
There is legislation that potentially could change some of these things. We're unlikely, given Chevron, to see an interpretation not to come that way, but that's a little unsettled because in this case, it's legislation that's basically making these things happen. So it's unclear as if.
And that question's already come in. Will the overturn Chevron impact BOI? And the answer to that is no, because this is law.
Right. So the filing dates, the requirement to file, the thresholds are generally in the law. Now, there are going to be lawyers that go after all of these types of things, but generally that's not what the Chevron doctrine is about. It's more about interpretation and action of employees of the federal government as opposed to a legislative action, which this was a legislative action.
Yes.
But I really ought to put a big caveat on that, saying the lawyers are going to get involved into it to a more degree, but there is a legislation regulation difference here.
Yeah. So, and to your point, FinCEN has been very careful to stay within the letter of the law with regards to BOI. So as I was saying, we recently did meet with FinCEN, and they were very open to discussing both legislative and regulatory solutions with us. We also pulled in stakeholders to express the pain points that small businesses are facing right now, because ultimately BOI isn't just a CPA problem. It's a broader issue that really is impacting and hurting small businesses. Now, FinCEN was very receptive to listening and understanding our pain points. And based on all the feedback that we've had, most of the concerns that people have, it boils down to three main areas. So the first one, UPL and liability. So we do have two state opinions so far. We live in a global environment, so sometimes it can be a little bit unreasonable for a CPA to know and be able to keep up with those 50 jurisdiction opinions. And we'll touch base on those opinions soon. Lack of clarity is a big issue for a lot of our memberships and small businesses. And because of that lack of clarity around various scenarios, a safe harbor for a CPA when completing the BOI report would be really greatly appreciated. And of course, the 30-day timeframe turnaround for an updated or corrected BOI report, that is really unreasonable. And we are pushing for about a year frequency on corrections and updates. Now, all of this is to say that we are having ongoing productive conversations with FinCEN and with Congress. And I do need to make a point and note that FinCEN, actually, their main focus is on awareness. Because if we go back to the previous slide, it shows that as of now, there have only been 2.5 million filings of the 32.6 million filings. So there is a lot to be said in those words, and FinCEN is concerned about raising awareness. Okay, so in the meantime, like I said, we've had 2 states that have come forward with opinions on whether or not the services of the Corporate Transparency Act are considered unauthorized practice of law. Now, the 2 states really, both of these opinions are guidelines, and those are guidelines per state. So in other words, Maryland is only applicable to entities in Maryland. The same with New Jersey, it's only applicable to entities within New Jersey. And their approaches are very different in how they came about. However, the end results are somewhat similar, and those end results are in line with what we have been saying and advising our members. So when you look at Maryland, they pretty much interpret that BOI services is not practice of law, and they actually delineate services that you can provide that are just not practice of law. And they tell you to beware, use professional judgment. With New Jersey, this is where it's slightly a little bit harsher because they view it as automatically, if you're providing services for BOI, as practice of law, but not unauthorized practice of law. So that's the key. Now, New Jersey also took a look at this and they equated it as the same as like preparing an estate tax return. And so they do believe CPAs and enrolled agents can provide this service. And they do ask you to advise that maybe you might need to be able to advise that you might need a lawyer involved. Where the real key is for New Jersey, it comes in where New Jersey is depending on the CPA to make the professional judgment of when they need a lawyer involved.
Well, and then we've got this potential BOI legislation that.
Yes.
Yeah, so
So,
let me
yeah.
to just hit this really quick, and I think both of those rulings are aligned with what we've been saying. It's not the unauthorized practice of law. They, as Melanie says, they interpret different words to get there, but they get there. But there is legislation pending. We just talked about, all the wind out of the sail of legislation, but something could move towards the end of the year. And it specifically, the legislation that is pending, federal legislation, specifically creates a liability safe harbor for CPAs doing this work. And as we are also trying to address the filing deadlines, the 30-day rule, the things that Melanie talked about 2 slides ago. And there is some notion, and it really is sort of bipartisan, to try to find some rational answers into this process. So we're working really hard to try to get some enabling legislation that would extend due dates or maybe extend the time for some of these filings. And while doing that, get the safe harbor so it's absolutely no debate on it. And those of you who have heard me on the town halls, I personally think that this is a service that most clients would expect their CPAs to help them comply with. I think it is a business line that could be looked at. There are firms doing it. There's certainly firms choosing not to do it. That's a firm's decision. But we think that that's a critical component. And also, we also agree with the pressure points of 30 days and things of that nature not being very realistic.
So we're going to move to technical updates now, and we are looking at some solution options for firms. There's dialogue here about what would the elections, change in administration mean to BOI. I mean, the feeling right now is that this seems like it will continue on, but to be determined.
Well, just one really important point that I think you understand this. So
Right.
BOI is in the context of anti-money laundering activities.
Right.
The U.S. subscribes to a global element in the G20 countries to curtail money laundering type activities. The U.S. will be audited on that in 2026. It's
Right.
a sort of a cooperative audit through the OECD, et cetera. And so it's possible that an election result could cause legislation to pull this back. I think it's more likely that we would see legislation to fix some of these filing nuances or pain points that exist in that environment. I think it'd be unlikely that Congress would agree that, to just step away from sort of a global initiative on money laundering at this particular point.
So it will continue to evolve, and looks like there'll be some type of BOI requirement, regardless of who the administration is. So, Melanie, I know a number of these slides are kind of reference slides.
Yep.
So let's kind of move through this section, and then we can have an open forum.
Sure. So the LaHood bill was recently introduced, and that brings forward a lot of provisions. Well, it's based on the National Taxpayers Advocate Purple Book, and it brings forward two in particular provisions that we've supported, and that's the mailbox rule, which allows documents that are electronically filed to be considered as timely on the day they're submitted, not when they're processed or when they're received. And it also pushes for true quarterly payments. Moving on to the next slide, we know that there will be a lot of tax administration packages coming forward. You know, we've alluded to this already. We do know that there is a package in particular being pulled together by Wyden and Crapo. Now, nothing has been released officially or confirmed, but our understanding, again, is that the foundation is the Purple Book. And again, that Purple Book has lots of its references to our recommendations. So we don't believe this will move forward in 2024, but we do believe this is a 2025 package, and it hits some high-level pieces of what we've heard will be included. So disaster relief, our main provisions there, which will offer lots of relief to victims. The SAFE Act, again, that is something that helps with being able to do extensions without the cost or the burden associated with it. And then, of course, prepare regs, which we would love to see resolved and see action on this once and for all. On the next slide, we have ERC. On July 1st, IRS dropped proposed regulations where they're really touching base on erroneous overpayments of interest, and they are saying that there will be an underpayment of tax on them, and there will have to be a payment. Now, the preamble is clear to say that this doesn't take effect until the proposed regulations are in, but there's still a lot of uncertainty and unclarity that we do need to know, because we just don't know what about the recapture of interest, or how will they go about other pieces. So again, this was dropped, proposed regulations. We need a little bit more. On the next slide, we're covering what I mentioned, the digital assets brokerage statements, and this is one that we referenced with the Chevron case. Now, when this came out, this happened right after the Chevron case, and it has approximately 365 pages of regulation. Now, a lot of this is legislative in nature, but at 365 pages, there are interpretations. So pieces of this could be valid while others could not be. So there's a lot of questions around this in particular. And of course, at 365 pages, there are still concerns. We feel that there is still clarity is still needed. But in all fairness, the IRS is making an attempt to balance or to strike a balance between compliance and clarity and guidance. Okay. So the next slide, I just want to raise the awareness for everybody that IRA, the Inflation Reduction Act, came forward and they funded the IRS with additional funds for enforcements. We're beginning to see things, and IRS announced the results when they were targeting high net worth, high wealth individuals that had outstanding balances due, and they've pulled in about $1 billion so far. And of course, they've also done the basis shifting transactions, which they're focusing on for partnerships. And again, that regulation is also one of those that we have questions on with regards to Chevron. And then finally, on the next slide, I just want to raise awareness. The Taxpayer Advocate issued her mid-year objectives report, and it is a good read, but it highlights issues that they saw during the filing season. And one of the things that I want to point out is that she did highlight that the IRS's 88% level of service is misleading, which leads to poor resource allocation, which we know that based on our survey results that we get from the members. So if anybody has time, read the link in the report.
Well, Melanie, that was fantastic. And one comment was, this is one of the fastest hour. This is the fastest hour of the day for them. I think you've helped make that happen. So thank you. I'll tell you, the BOI questions have been coming in fast and furious. You know, here's one just comment. It's a common question that they really need relief now. They don't want this to kind of move into, busy season next year. So that's just a call for us to get this legislation passed, Barry.
we're working. We totally understand that feedback, and
Yep.
we agree with it, and we're working it really hard. But Congress isn't passing anything right now, and with the presidential election. But we will, when the elections occur or when it settles down a little bit, this remains something that we are on the Hill constantly on and working it very hard.
And as Melanie said, you're almost meeting weekly now with FinCEN.
Not quite weekly, but they're definitely ongoing and consistent, and they're actually productive at this point. So it's good. We hope to see resolution.
Yeah, and I think a good point is that we probably would not get, as a bill started to move, with the relationship, I don't think we will get pushback from FinCEN to try to fix certain things. And that's a really important thing, because when agencies push back against legislation, we could still prevail, but it makes it more complex to prevail.
Well, questions coming in on Barry. Everyone always appreciates you saying this could be a service line, and firms are asking, how are firms charging by filing, by number of officers, flat fee. And that's something I think that we can bring.
Let's bring some practitioners on who are doing it.
To a future town hall.
I agree.
Talk about systems. So these questions definitely drive our future agendas and what we're going to be putting on future town halls. So with that, we're going to wrap up our open forum section. Melanie, thank you very much for being with us today. Barry and I just got a couple of slides here that we're going to close out with. So here's a opportunity to nominate maybe somebody from your practice related to something innovative they have done. This is an award that we give out annually at Digital CPA. So you can find out more information at this link. We also want to share with you our calendar for the remainder of 2024, Barry. So you'll be with me. We're going to be together again for the next town hall on August 1st. You can see the remaining dates, and we try to make the registration easy for you. Right now, if you've got your phone, you can just take a picture of that QR code there, and it will automatically register you for all of these town halls. After the town hall, we always send out our newsletter. We'll be sending out the top questions and also links to some of the materials that we covered with Wes Bricker earlier today. So Barry, it's great being with all. We had 10,000 attendees today in the middle of the summer. So it's great being with them, great being with you. I'll let you sign off.
Well, first, thank you. Great job, Eric, as you always do, and Melanie for participation. We'll thank Wes. And I really hope, I know a lot of people in the town hall, capital markets is not what they're waking up on in the morning thinking about, but we do think as part of these town hall series, thinking about those broader picture items is important, and it's a good discussion point inside the profession as well. So thank you for listening in on that.
Thank you. We'll see you again on our next town hall session.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.